Hello everyone, hope you're doing great. Welcome to India Invest Now. Today we are going to talk about equity mutual funds and everything related to it. During the course of this video, we will cover the following. Number 1, what is an equity mutual fund? Number 2, how companies are classified based on their market capitalization. Number 3, what are the types of equity mutual funds? Number 4, what is a risk reward for each type of fund? Fifth, some key points. And sixth, there will be some recommendations from my side. Okay, so let's continue. What is an equity mutual fund? You are looking for ways to invest in a stock market, so you can invest in two ways. Either you directly buy stocks or indirectly you work through some fund manager. And this is an equity mutual fund. So in equity mutual fund, multiple investors pool their money. That money is provided to a fund manager, and then that fund manager invests that money in the stock market based on the fund mandate and the fund focus. Like every fund might be mandated to invest in certain sort of stocks. So based on the fund focus and fund mandate, they invest that money in the stock market, and then the returns are generated which are provided to the investor. So this is an equity mutual fund. Okay, let's continue. Next point. How companies are classified based on market capitalization. So first thing is, what is a market capitalization? Market capitalization is, in short, the total value of the stocks of a company that are listed on the stock exchange. So we have three types of market capitalization. So we have classified the stocks as large cap stocks, mid cap stocks, and small cap stocks. So large cap stocks comprise of the top 100 stocks by market capitalization. Then you have mid cap stocks. Mid cap stocks is from position 101 to 250 based on market capitalization. Then we have small cap stocks. So from 251st position, whatever the stocks are there based on market capitalization, they comprise of small cap stocks. So now mutual funds invest based upon what is the market capitalization of the company and which category the stock is lying in. So let's continue with what are the types of mutual funds. First is large cap fund. So large cap fund invests is only the large cap stocks. So basically large cap fund invests in top 100 companies by market capitalization, and at least 80% of the fund money should be invested in large cap stocks. Next, we come to mid cap fund. As the name suggests, in a mid cap fund, at least 65% of the money should be invested in mid cap stocks, which is from position 101 to 250 by market capitalization. Next is a small cap stocks. Small cap stocks, we invest in only the small stocks that lie in the small cap category, which is from position 251 based on market capitalization. So now you know the large cap stocks, mid cap stocks, and small cap stocks. But the investors are very demanding. So now you are saying, okay, you want the flexibility to invest in all companies across all market capitalization. So here comes the flexi cap fund. In flexi cap fund, at least 65% of the money should be invested in equities, and you don't have any foundation that the money should be invested in large cap stocks, mid cap stocks, or small cap stocks. Next category of the fund that I wanted to discuss is multi-cap fund. So in a multi-cap fund, at least 65% of the money should be invested in equities, but in multi-cap fund, 25% should be in large cap, 25% should be in mid cap, and 25% should be in small cap. So at least 75% should be in equities and 25% in each category. So you also have a fund category where you have 25% across each category as the minimum mandate. Okay, now we have discussed about both flexi cap fund and multi cap fund. Now we come down to value cap fund. So what happens in value investment strategy funds, which are called as basically value funds? So in value funds, fund managers invest based upon the value investing strategy. So it might be that they are trying to identify stocks whose value is lesser than the stocks of the same category. So it can happen like there might be all the stocks are undervalued because the market has fallen. There might be that the stock is undervalued in comparison to other stocks in the same segment. So every fund manager has their value investment strategy, and based on that, they invest in value funds. Okay, next we come to index fund. Index funds are very popular. Index funds are basically used to invest in an index based on the index. So what happens is, suppose you are investing in a Nifty index. So every stock that is part of the Nifty index in the same composition is also the part of the index fund. So basically, index funds replicate the returns of an index. So if a stock is part of an index, it's part of your fund. If it's not part of an index, like suppose in the future that index changes and one stock moves, another comes in, at the same point, the fund also changes in the index fund, the stock. Okay. Next, we have sector and thematic funds. So there are certain stocks, funds, which are based on the theme and the sector. So if it's based on the sector, so it can be a pharma fund, it can be an infrastructure fund, or if it's based on a theme, so it can be a consumption fund. So there are certain funds which are based on certain themes and sector, and they are sector funds. In sector funds, at least 80% of the money should be invested in that sector fund. Next, last but not the least, we have got hybrid funds. So hybrid funds, you have got at least equity-oriented hybrid funds have at least 65% of the money that is invested in equities and 35% in debt. And this category is also known as balanced fund at times. So these are the type of equity mutual funds that we have. So I've explained you how each fund invests in the stocks based on the market capitalization, and some funds have the flexibility to invest across all market capitalization. Some funds invest only in specific sectors, and some funds are for passive investing like the index funds. Okay, next I continue further. So I wanted to discuss with you the risk reward of these types of funds. If you see this diagram, you will see hybrid funds are least risky. Reason being, they have got 35% investment in debt, and that is the reason they are least risky. Next, the least risky funds are the index fund. So if you're investing in Nifty, you have got funds, companies that are very stable, and that is the reason index funds are considered less volatile. Then we have got large cap funds. So large cap funds invest in top 100 companies, and so therefore the returns are generally stable. So the more we move from large cap to mid cap and small cap, the returns will increase, but the risk will also increase. And this is what is being depicted in this picture. So the moment we move to mid cap funds, the returns will be more, but there will be more risk. Then we have got small cap funds. And as I've already explained, the large cap is top 100 companies, mid cap is from 101 to 250, the small cap is from 251 onwards. Then we come to sector funds. Why sector funds have more risk? There might be headwinds that this sector is favored right now. Like these days, basically the energy sector and oils are favored. So all those funds will be up. But if the sector is not getting favorable returns right now, because it's not in demand right now, so sector funds have the capability to give you good returns, or sector funds might not give you good returns at a certain point, because it depends upon how that sector is performing at that point. Same if you take the case of the pharma fund. Before COVID, for 3 years, pharma funds were not giving any good returns. But when the COVID came in, the pharma funds gave very good returns. And you might have understood because the demand for things of medicines have increased. Okay. Now, next. Last but not the least, this is how you will have the, if you see this graph, this is how you have the risk and reward for all these funds. So the key points. Large cap fund invests in top 100 companies. So they are generally stable, and you should look to invest in these funds if you are going to start your investment. Mid cap and small cap funds have the potential to give you higher returns, but they have more risk as well. If you understand how equity mutual funds work, so you need to also understand that mid cap and small cap funds are more volatile in comparison to large cap funds. So what happens is, you need to understand volatility. So it will happen that during the downfall periods, mid cap and small cap lose more of their value than large cap funds. So you might panic. So since you understand the volatility now, you should also understand that becomes a good opportunity to buy those funds more during the downfall, because now you are buying at a very good price. So that is the reason I'm saying, if you are okay with the volatility, invest in mid cap and small cap funds. If not, stick to the large cap funds till you get used to the equity markets ups and down. Okay. So key recommendations from my side. Why I included? Because I just wanted to give you a bit of a roadmap that will help you. Key recommendations why. First, if you're looking to start your investment journey, start with large cap funds. Simple. Top 100 companies, you will have a stable return and you will have less volatility. Second, if you're looking to enhance your returns, invest in a flexi cap fund, which has, like, why I'm saying flexi cap fund, because that will have more of a large cap feature, but they will have certain mid cap and small cap stocks. So that will enhance your return. If you are not okay with the volatility in the large cap fund and in the flexi cap space, look for the funds in the balance category. So this way, you know, okay, you're okay with the volatility, you invest in the large cap fund. If you think, okay, you want more returns, you go with flexi cap fund. If you think you are not very okay with how the volatile the markets are, just come with the balance funds. And this way, you know for what risk situation, what fund you can invest in. I hope you like the content. That is it from Equity Mutual Funds. If you like the channel, please like, share, comment, and subscribe. And you can also follow me on Medium. And this article will be written on Medium as well. Thank you very much.